What's going on, guys? Michael here, 360 Digital Closing Bell. I am live from an undisclosed location here in Denver, Colorado, coming to you for our week ahead podcast here on Monday, April 13th, 2020. I hope everybody had a good Easter. I am also joined live from an undisclosed location in Dallas by our executive producer of the show and the director and publisher of Oil and Gas 360, Stuart Turley. Stu, how you doing today?
I'm doing fantastic, Michael. Happy Easter.
Yes, happy Easter to you. We have an unbelievable show lined up for you today. We finally know what's happened with OPEC, which is very nice. We will get into all of that and what the fallout is. We're going to take a look at just the oil week ahead. We'll check the levels, obviously check in with the commitment of traders, see how that's looking. We have an insane company to watch. We're about to throw a bunch of different things at you. Then we'll call Steven, get his thoughts on what's going on with the midstream business, and then we will call Nick, and me and him are going to chat, hopefully just about what the fallout from some of this OPEC stuff. It is a great show. I hope you guys enjoy it as much as me and Stu have been putting this together. Before we get going, though, we just need to do clerical work first, guys. If you're not subscribed on iTunes, Spotify, YouTube, please do that. It's really the only way we get credit for you is if you subscribe and listening. And we appreciate everybody who's done that. But please, if you are already subscribed, unsubscribe, resubscribe, do whatever makes that algorithm go nuts. We appreciate the love. You can find us on Twitter at Entercom and Oil and Gas 360. On LinkedIn, Oil and Gas 360, Entercom. You can find me, Michael Tanner. You can find Stuart Turley. You can also email us. You can find any of the emails that you find on our public profiles. The Energy 360 Network on oilandgas.com or 360.com has had so many great interviews, and that's something I'm really excited to have been a part of. We're actually going live. We have a virtual happy hour that we'll be doing April 16th at 4 p.m. That's really an energy meets tech intersection. We have a really great panel of energy tech venture capitalists who are really going to be able to give us a great idea of what the outlook for the energy tech looks like in this environment. And then we also have a CEO of an oil field services, of a large oil field services company, and formerly a CEO. He's also formerly the CEO of an operating company. He's really going to be able to give that outlook from an operator and a service company side. How do we navigate this price environment? It's going to be a great event. We'll be pushing that out here soon. We've also got some great interviews lined up. If you haven't already checked out the Enverness interview we did with Bernadette Johnson, who's the Vice President of Strategy Analytics, she wrote an article on the dark side of the boom. It was a tremendous, what's the views up now on that? The views were huge on that.
I haven't checked, but it was over 500 and about 17 within a couple of hours.
It was unbelievable, the reaction we got. It was unbelievable, like Stu mentioned. So with that's all our clerical work, and we'll go ahead and dive into segment one, which is basically just talking about finally what's happened through OPEC. We spent Thursdays and Friday's show all talking about all of the wild rumors that came out of all of these meetings, and really what it came down to was a Mexican standoff between Mexico and the rest of the world. And when you look at the actual numbers that came out, I found an article on fxstreet.com, which is a really good. If you're specifically trading currency, it's one of the best places I recommend to go find just real-time aggregated news. FX Street. They don't advertise on us. That was free advertisement right there. So if you're hearing this, anybody at FX Street, you can hit me up, mtanner@entercominc.com. But they do a really good job of aggregating some of this stuff. And they had a really good article from one of their writers that I think really put in perspective and really broke down exactly what the OPEC terms came out to be from this meeting. I know there were so many rumors, and I'll sort of just read it to you what it was. So according to the terms of the OPEC of the deal, OPEC Plus will decrease its oil production by 10 million barrels per day from May 1st, 2020 to June 30th, 2020. Then the production adjustment will total 8 million barrels per day from July 1st to December 31st, 2020. This production adjustment will be followed by a 6 million barrel adjustment from January 2021 to April 30th, 2022 for all countries except Saudi Arabia and Russia. The baseline production cuts is the oil production in October 2018. In turn, Saudi Arabia and Russia will raise their base cuts to a level of 11 million barrels per day. And what happened with Mexico is this. Mexico offered no more production cuts than 100,000 barrels per day and left without signing the deal. However, there were recent reports as of this weekend suggesting that the U.S. has agreed to help Mexico with the deal. And while there has been no official confirmation yet, there are little doubts that Mexico will ultimately join these cuts, and hopefully it will cut production up to that 10 million a barrel thing. So, long-winded response, but that's what happened. We got 10 million barrels like requested But Mexico still really hasn't signed the deal, and there's a lot of news that is, sort of dropped this weekend to suggest that. I know Stu mentioned that Trump had some stuff up his sleeve, and do you think this was it? Do you think it was he has a way to help Mexico get these cuts more?
Oh, absolutely. The man's devious, and I absolutely think that there may be some surprises on that because I think the North America trade, NOPAC, may actually come around. He may put some tariffs on them, but I don't know what Trump's got up his sleeve. I know it's evil.
Yeah, we're gonna have to, I think, spend next Thursday's or Friday's show, doing a deep dive into tariffs. That was something we've been chatting about, and I think that's what we're gonna plan on doing. But really this article mentions that one big thing that I just want to pull out of this was that these cuts are only to prevent prices from falling further, and they're not necessarily meant to increase the price of oil per se. So I think, if people are looking at these cuts and saying, okay, well, oil's trading at $22 right now, these cuts should drive it all the way up to 35, 40 levels before this. Well, no, we still have 10 to 20 million barrels that are being left off as a gap in the market, which represents such a huge, huge number. And the key that I think, I want people to latch onto, and this is something that, Bernadette touched on in the dark side of the boom, but unemployment is coming to the overall economy like a train wreck because of this coronavirus stuff. I mean, the latest unemployment numbers are unbelievable. I wouldn't be surprised if we have 15 to 18% unemployment. And as an economist by trade, one of the first things you do when you get into sort of a college level economics course is you map out unemployment levels with various levels of economic distress. And unemployment has a huge indication on how much disposable income people spend, which is how often they go out, how often they drive, how often they physically move around, which is terms of oil demand. So even when this coronavirus, I think, dissipates, maybe in a month we'll be able to reopen the streets again, and businesses will. That's what the latest talk is. Maybe it's 3 months, 4 months, 6 months. Who knows? Whenever that time period is, when that happens, the economy is going to have been in shambles until that point. No one's going to have made money. So people aren't going to necessarily have the ability to immediately go out and start spending disposable income, a la driving places, consuming things in terms of commodities. I read a statistic the other day that 60% of Americans are $1,000 financial crisis or $1,000 unexpected bill away from financial ruin. 60% of America. That was before this crisis happened. I mean, there's a reason they're pumping $4 trillion into the economy right now. So I think the fact that we're not focusing as much on unemployment as a top line, that is going to hamper demand for a long period. Whether we end up getting into a more prolonged recession that maybe, I don't want to say, I'm not saying the D word, so don't make me, but a more of a prolonged recession, it's going to have a huge, huge, huge impact on total demand, and we still may see a 4 to 5 million barrel gap once this all steadies out for 6 to 7 months, even after the economy reopens, because there are still people working back up to have the ability to just go drive somewhere. I mean, no one's going to be flying. No one's going to be buying plane tickets. No one's going to be taking road trips, even if gasoline is low. But and so that's really, I think, the biggest thing that I took out of this. Yes, Mexico, as I joked, Mexican standoff, they're in, I think. I think Mexico, because they're so well hedged, they played their card. They said no, and part of, as Stu mentioned, trick up Trump's sleeve was we'll work around that. Let's get you up to the 2, 3, 400,000 barrel a day to get all of this up to 10 million barrel cuts, so we can attempt to rebalance the market. But this doesn't do enough. And really, what this does is it leaves, as we'll talk in things we're looking for, is it leaves an April 14th. Another show off between, U.S. companies. But that's just really, my overall thoughts from OPEC and how everything's laid out. I'm not necessarily I think this was a week, depending, if we talk about buy the rumors, sell the news, the rumors were much more spicy than I think what actually got laid out. Now, this agreement, now that it's signed, I think you might see a little more reaction. I think, it might take, 1 or 2 months, but depending on how the coronavirus stuff, I think this will ultimately be obviously a boon for oil. We're taking supply off the market, but I'm not sure if this is going to be the, gasoline on the fire in a crude example, pun intended, to increase the price. So
you got crude and gas in there.
It was a good one. So we'll make sure not to cut that one out of the recording. So that's really my overall thoughts on OPEC, Stu. I don't know if you have anything else. That was good to just kind of get off my chest and rant for a little bit about OPEC. And we're definitely going to chat with Steven about this because he mentioned to me something very interesting that we'll have to bring up, and we'll definitely get Nick Berry's thoughts on it later. They will be joining the show for an iTunes exclusive. But anything else you need to before we move on to This Week in Oil?
I think your rant was very accurate. So rant away, Michael.
Awesome. So, and that really is just going to move us into segment 2, and we're just going to talk about the week ahead in oil trading. And as always, these numbers are sponsored by Sandstone Capital Group. These guys do insanely good research. They provide all of the data for the show. Rumor has it they're about to launch an energy newsletter, and I think they've named it too. So once that information is public, I'll make sure to get that through you. If you do want to work with these guys, they're very easy. Just go to sandstonecg.com. Then everything, their contact information is all right there. I highly recommend them. Let them know you came through the podcast. A, it's how we get credit. It's the only way we get credit. And B, they'll cut you a deal because they're good guys over there. So we get ahead in oil. Really, the things I'm looking for is we're looking for Mexico to officially sign the deal. Rumors are that they're going to sign the deal. We need that deal to actually be signed, and then I think you're actually going to see that slight bump up in oil. But until they sign it, it'll be very interesting. The next step is another showdown, and this is between the U.S. this is between the U.S. operators, and specifically Pioneer and Parsley, who have come up and said, "Hey, we would like Texas to reenact Proation, which is, hey, we're going to manage the level of production from a statewide level." That hearing's April 14th, and who knows what's going to happen because Exxon and Oxy, on the other side of the equation, have come out and said we do not think we should cut production. We should continue to produce, and we should allow the free market to decide. And if you're making me take a side, I'm a free markets guy, and I have a hard time telling you that we should really cut production from a legal standpoint. We are living in unprecedented times, so I see the argument for it. I just think it should be a company by company decision. I think you're already seeing that happen. I mean, if you've been watching the EIA reports, I mentioned this in my Wednesday digital ticker. You should watch the level of crude production week to week. It's already dropping. 600,000 barrels was last week. I bet you will see another 400 to 600,000 this week. That's the free market working. Now it takes a little bit of time for that to happen because you can't just shut in wells quickly. But I think naturally you're going to see wells get shut in. I think why you're seeing this idea get a lot of traction is because of the storage issue that Stu has covered tremendously on this podcast, and that we've talked a little bit about. We talked to Steven last week about that, which is awesome. About that's really where I think the Proation comes in, and if we think storage is going to fill up even with the natural production cuts that the free market, then I think you can get me on board. I mean, I'm very open to. I tell people this all the time. I'm open to changing my mind if you give me good data. So, I think the one data point that would swing me on this would be how fast are we going to fill up this storage, and how fast is the rate of natural production decline that we're going to see because of this price decline. So it'll be very interesting. And I think that's the key, and that's what we're looking for. Maybe I'll see if I can put together some models we can share with it on the next week podcast. But that's what I'm looking for, Stu. What do you think? Should Texas be cutting mandating production from a federal level or government level?
I hate mandates. I think that the mandates or the tariffs should come from the feds and then let the market handle it internally. So I don't think that they should. When we go through our companies, maybe we can talk about Pioneer. They got some numbers on their chart as well. So we've got a couple others to look at, but maybe you can bring that one up.
Yeah, we'll definitely talk about Pioneer here, but yeah, so I think, I think it would be an interesting, I would, if you have, like I said, as a trader, you have to make a buy or sell decision, even if you're not 100% either way.
But
I'm selling this. Oh, sorry. Go ahead, Stu.
Sorry, Michael. Think about this though. When would you have ever guessed that Texas would be considered as powerful as a country in OPEC discussions?
Yeah, what I just think is crazy is that Ryan Sitton is a sitting Texas Railroad Commissioner, is advocating Texas becoming basically a cartel. It's just fascinating to see the dynamics here. It's just fascinating. I would have never guessed that Texas, there would be this much steam, that you would have two large companies, Pioneer and Parsley, on record as saying, we want Texas to mandate that everybody cut production. That, I think, in and of itself is unprecedented.
Right. Well, you know what? Texas is got a constitution that says we can secede from the union. So why not?
I mean, I'll leave all the Texas Constitution stuff up to you. You are, as we joke, live from an undisclosed location in Dallas. So
I'm a Texican, so
yeah, I love it. So from that standpoint, it'll be very interesting. We will be covering that meeting on April 14th like it's nobody's business. We will have all the rumors for you out on the digital closing bell. So make sure to be subscribed at www.oilandgas360.com. Just another shameless plug for our stuff. Really when on the outlook for the week, I'm short oil just as and when I say that, that's more of a bias. My bias for the week is I'm short oil. I think anytime I look to get into position, I'm going to say, hey, I'm going to be biased towards the short side. I'm long energy equities from a bias standpoint. I just think that with all this, from an equity side, the stimulus money starting to flow in, over $600 billion. Bank of America did this last week in PPP loans, which is the Payment Protection Program loans, which basically provide free rent. As long as a business owner uses it on rent, utilities, and payroll, it acts as a quasi grant. Otherwise, it's a 2%, 1% yield at about a 2 to 3 year maturity rate. I don't quite have the numbers in front of me, but I was looking at them yesterday. So, and they did about 600. Bank of America did about 600 billion of that just last week. So, money is getting pumped into the economy, which just helps the equities market in general because this stuff always flows at least some point through the stock market. So I think my bias on energy equities is going to be long. It's going to be actually, not to my pick of the week is actually the XOP contract. So you get a little free news before we get into it. Just because that's my bias all week is I'm long energy equities solely because I think the equities market is just going to be up. I think you're going to see some good news come out on the coronavirus side. President Trump is talking about this week. They want to reopen the economy at the end of the month, and that's what they're pushing towards, and that's what some of the data says. So if that really is some of the news that drops, that's only going to be a boon for the stock market, especially when we talk about the equity side. We went over the levels of the week, but I just want to run through on my Thursday podcast, but I want to run through them again. If you're a bull, 24.50. 85, I think, is your first level, 26.55, and then 28.28. I think are your three levels on the upside to watch for, depending on how that news drops. If you're a bear, $23.53 is really your swing point. I know currently the market is market's closed 22.76. That's close enough to that pivot point that I think we're just going to set that as my swing level on the up or down side, whether I'm bullish or bearish for the week. 22.51 and 20.39. I'm eyeing 22.51. As the level that I think we're going to bounce off of. So if you are a bear or if you are a bull this week, I think you should let this market depress a little bit. Let it get down to either that 22.50 or even all the way down to maybe that 20.39 level I'm talking about before you then get in on a long. But it'll be very interesting. Commitment to traders, pretty normal stuff this week. Producers, merchants, longs, they're up 13,000 contracts and 13,000 on the short side as well. Really what came back in balance was swaps on the long side dropped by 13,000 contracts. Remember, for the last 2 weeks, our swaps on the long side have been up. About 10,000 contracts, which is very interesting because in a depressed price, swaps are very difficult to get in because they're very expensive. The cheapest type of insurance in this environment is to do some sort of collar or just buy single put. So you're finally seeing those swaps swing back into place like they normally would. 33,000 swaps on the short side. That balance, to give you an idea, there's only 126,000 contracts for swaps on the long side to about 666,000 swaps on the short side, which is, that's the number you normally see because generally you're trying to swap. You're generally swapping production. You're generally swapping a lower production number for a lower oil price because you're just giving up that marginal cost to try to lock in some revenue from an accounting side. But it's really nice to see the swaps on the long side dropping. That's generally what you see. Managed Money got long on oil this week, and they cut a bunch of their short contracts, which is very interesting. Now, I don't necessarily think hedge funds do a necessarily good job of trading oil, but Managed Money, it's long on oil at $22. So, if you do like to know what the institutional guys are doing, they're long oil and they're cutting from their short side. To give you an idea, they're 270,000 contracts long on oil to only about 91,000 on the short. So very interesting on that end. And that's really what I'm looking for at oil this week. Obviously, if you have any updates or have any levels you want me to look at, please reach out to me at mtanner@intercom.inc. But really what we're going to do is we're going to flip over to a little share screen and our company of the week, really are turning into sort of some of our picks of the week. And this is just from a bias standpoint. Tomcat's got some great stuff for it. Stu's got some great stuff to talk about. And then I want to talk a little bit about my pick of the week. And we're going to go ahead and start with Tomcat's suggestion. Stu, can you tell me a little bit about what Tomcat's got for us?
Tomcat's got really two of them. And when you take a look at Devon, let's go to DVN.
Cool.
and Devon.
Sorry, I'm on my
And
wrong chart here. So if you guys, just to give you guys an example, you're looking at my screen right here. If you're on YouTube, this is I have two separate charts here. I have a day trading chart where I'd map out all of our levels here. So I'm not lying to you. I've got these levels mapped on my chart. For those of you
very
listening on
good.
the podcast, I also keep a research chart, and both of these are open source. I will give them away. So I just wanted to let everyone. I'm flipping over to the research one, which has a little just other stuff for us. But we're looking at Devon.
Yes, Devon. Now, Devon is not necessarily one for a long time. If you take a look at their the technical stuff, they are rated as sell right now. So it might be one to take a look at day trading. Their chart looks fairly awful. But on the other hand, it looks like they've got some announcements coming around the corner, and he's got it tagged to watch. So
Yeah. So and what I think he's looking for on Devon is something simple. I mean, he's looking at the moving averages. Our green line here is our 50-day and our 200-day, and our white is our 50-day. I think what
yes,
he's seeing is the convergence on that. You can see the distance they were apart. One of the best algos you can run is just mapping the distance between these at all times, and you can make some very interesting trades of that. What he's also looking for is the moving averages. They've all turned from 5 to 20. They've turned to a buy sign. When you're looking at a day trade, which is, in my mind, anywhere from 10 seconds to maybe a week, really what you're looking at is these shorter term moving averages. Obviously, from a long side and in an ICMO cloud baseline, they're not really showing anything. But the short side, on the easier side, which is maybe the swing trade side, I think there's some room there, and I like this pick from Tomcat.
you bet. And got a couple other here's just to take a look at. Geopark, and that is GPRK. Jim Park, Geopark is a longtime presenter at Intercom and the oil and gas conference. They are fabulous people. Michael, you and I have always talked about good management, good numbers. They not only are good management, Jim is one of the upstanding, love talking to him. He is a neat guy. Take a look at their numbers. They are also on the moving average, looking at coming up. While they are in the small cap type of environment, they are in a different zone. They're in South America. South America is not having the same issues and being affected.
Yes.
And so they're a bit isolated on this. Now, Colombia has $4 billion that they're putting into EMP and exploration to help get them away from being oil import. Take a look at Geopark. It's got some good stuff. The simple moving average is rolling into a buy. Tell me what your thoughts are.
Yeah, I see two things. Well, one, obviously, energy equities, most of them are going to be looking positive in that short-term chart, partly why one of my picks is just going to be taking that whole XOP contract as a whole. But really what I'm seeing out of Geopark is two things. One, RSI is still trading above 58, but it's turned around, so I don't like that. MACD flipped around, which is really good. You like to see this above 1. But really, when I look at a long-term company, and specifically, so they're in South America, that means they're going to be a little isolated from some of this stuff. Colombia, Stu, some of them mentioned Colombia. Look at the market capitalization compared to the debt. This is a very good very well managed company, as Stuart mentioned, and it's shown in the debt. Only $450 million in net debt to an enterprise value of about $1.6 billion. You can get credit financing based upon that number alone right there. They're going to have access to capital to be able to continue to do things, and they're in an isolated situation, like we mentioned: Chile, Brazil, Colombia, Peru, Argentina, Ecuador, and they're more of a corporate. They have really incredible. They're founded in Franklin Park 2002, and they're headquartered in Chile. So really, I like these guys as a longer term play. Because I think they're going to stick around. And when you look at the financials and then that's when I look at the financials when I'm looking at a longer term play. Okay, in the short term, I'm not as much concerned about how much debt a company has if I'm just day trading them, unless I think they're going to go bankrupt tomorrow. But if I'm looking at a long term and say, hey, is there a value stock I can buy and hold maybe for a year to see if I can get some really nice value? This is what I look for in terms of the market capitalization and the financials. And I love Geopark. So this is a great pick, Stu. I'm really glad you brought them up.
Michael, our theory or theme is good management, good numbers, great management here, great financials for long term, and they're a little bit isolated from the panic going on in what we've got. The other one, I've got two that kind of fit into our Bernadette interview that you were on, and help ask some great questions on with the Enverus interview. Let's take a look at Cheniere Energy, which is LNG. Bernadette talked about, because the way things were flipping around, that we may see $4 natural gas. Taking a look at the charts and the stats on LNG, the tech info on it is actually coming in pretty good on the. It's coming in as rating as a buy, even on the exponential averages. But Mike, give me your thoughts on those, Michael.
So on a swing trade level, the moving averages are definitely giving us a buy. Why I like them specifically is, like I mentioned, they're in natural gas. I like to work from the source back. If natural gas is going to be $4, who benefits from that? I want to find companies who are transporting natural gas, specifically out of that Marcellus and Utica. I'm looking for companies that engage, service companies that engage with natural gas companies. There are some specific small cap public companies that I'd love to talk about once I do a little more research on that build, say, natural gas compressors that do things that I think we're going to have massive volumes of natural gas that we're going to have to do with. And really, when you look at the Cheniere Energy, right now it's actually a great entrance point. It's finding support at that 200-day moving average, which is a great entrance point. I mean, really to the upside, when you look at the volume, when I talk about volume on all my podcasts, this is what I'm just looking at. What's the how much volume is traded at each level? It's called this red line is what's called a point of control, which means it's where the most volume in this range where it's been traded on. So if you just look, it makes you very easy to map out some of these levels. Right now, we're trading in a huge volume chunk. So this is what I would call a value zone to get in on, because it's going to spend a lot of time hanging out here, because there's a lot of people willing to buy and sell in this zone. So you can really pick a great entrance point. And when this puppy either, if you're bullish on this, like we are, because of the fact that natural gas, we're expecting to see that price just continuing to increase. I think you've got $45 and $52, or excuse me, $45 and $50 is really your two. If you were to talk about zones that you'd want to exit this trade at, I think those are two great levels. And I love this pick specifically for the fact that Stu mentioned these guys is working backwards from our theory on if natural gas from Bernadette is really going to be $4, who benefits?
You bet. And then taking a look at a holistic approach to the market. Natural gas is going to be a play because of all of the things that you had talked about, lack of travel, all of those. Let's take it one step further into another part of the energy market, and that's power generation. As we take a look at power generation, let's take a look at coal. There's going to be a slowdown in the coal fired plants to natural gas fired plants, because if natural gas is going up, you're going to have, right now, coal's really low. And let's take a look at the numbers on Consol Energy. I want your opinion on it. It's CIX. The buy on it and the techs are really swinging toward the buy side when you're looking at the simple moving average and the exponential moving average. What are your thoughts here, Michael?
You know, I like it. We're still going to need to provide energy to people. And right now, if there are forced shut-ins, coal is a viable option that we have to convert to create electricity, because that's what we're looking for. So I think now, you might see a slight resurgence in the coal markets, just because I think you're going to see some of that volume getting purchased, especially if some of this crude oil is getting turned off. Now, that being said, it'll be very interesting to see how coal reacts with natural gas rising, because if there's this excess volume of natural gas, because of the fact that it's $4 and there's this race to produce it, it'll be interesting what happens. But if natural gas is $4, that means that there's the supply of it is not very good, and meaning we're going to have to find that energy from somewhere. I think you're going to see an appreciation of specifically other types of energy minerals. And I think Stu brought up coal is a great idea from a technicals perspective. It's spiked up very significantly, I think, due to the fact that people are starting to realize that. I think there's really good volume chunks. The fact that it's a $5 stock means that you can get a great number of them too. So you can, even if you're seeing a 50-cent increase, you can get in at 400 shares and get a nice 25% raise just on a, say 50-cent move up to $6, where, because really it's a huge volume chunk from here. I see, obviously it looks like there's $7 up there. From a technical standpoint, Stu mentioned averages have turned around on us. I like our average directional index showing a buy. That's one of my favorite symbols to look at. The other thing is, you can see this tightening on the squeeze. MACD has turned around, which is always a good sign. RSI is telling us that it's a sell, which is interesting. So as always, you get conflicting information on both sides, but I like it. If you're telling me if I'm long, short, coal, I'm long. I'm bullish on it because I do think we're still going to need energy. And if natural gas is $4, it'll be very interesting to see how much of that with the shut-ins are getting produced. All right, moving over to really my pick of the week, and it sort of just sums up, I think, what everybody was talking about, because I came into this and just was really interested in looking at XOP. I'm, as I mentioned in segment one, I'm bullish on equities this week because I think the stimulus money is really starting to get injected into the economy. And I think you're going to see a stimulus round 3 and 4 being passed very quickly. So I'm bullish on equities, which gives me a bias on energy equities to be slight on the bull side. And when I looked at the charts this morning while I was putting this all together, it really gave me some interesting stuff to look at. So really what I like here is these averages are coming closer. The 200 is moving and is now turned north. Really what we've seen, though, is there's this squeeze point right here. So if I go ahead and draw a rectangle here and I take this, you can see how there's this big volume chunk right here. And if I squeeze that in a little bit, big volume chunk right here, and the moving average is the 50 sitting on top with the 200 on bottom. Well, take a look at that. That's a channel right there that I believe that we're going to be able to get a nice entrance point with XOP tomorrow. You're going to see it, I think, bounce off the top here, come back down. I really think $40 is a great entrance point. And I think what's going to happen is when some of this stimulus money news comes out Tuesday, Wednesday, Thursday, what you're going to see is this rise back up when we see that nice flush point right here up at $43, $44. That's what I would look for in the energy equity space specifically. And I think if you're going to play it safe and not pick a company, I think playing XOP this week is a good idea. Like I said, I think you can get it at a $40 level. Watch it bounce off that 50-day at the top right here and see if it can depress back down and we can pick it up down at that 40, 70 level, I think is really good. But with all of this, as remember, we don't give investment advice. We just give our biases because that's what we do here.
You're right.
Exactly. So before we move on to giving Steven and Nick a call, Stu, is there anything else on the charts we need to talk about? Anything we're leaving out from Tomcat?
No, in fact, you hit just about everything. So I sure appreciate it and look forward to our phone calls.
Yeah. Speaking of that, let's just get them right now. Just incredible stuff from Nick Berry right there. And we will always make sure to keep you updated on why three-way callers stink. And with that, I think we're going to let you guys get back to work here soon. But really, I just want to talk about one quick thing before I do, and that is our Energy Tech webinar that we have coming up, which is more of a virtual happy hour. We are already getting questions in for the panel, and it's been really awesome. You can check that out on www.oilandgas360.com to register. It's going to be live on Entercom's YouTube, so it's just another way to subscribe to that YouTube channel. We're going to, we've got questions rolling. How many questions do we have already, Stu?
We got about 4 or 5 already, so I can't believe it. I launched the website landing page yesterday.
And we haven't even blasted it really out. Hopefully you'll be seeing that on Monday with this podcast. You'll see it all over social media. It will be really awesome. And we really appreciate all of the feedback we've got. And we're excited that you guys have tuned in. As always, please rate, review, subscribe. And now with that, I'm going to go ahead and let you guys get back to work. Thank you for checking out the 360 Digital Bell Look Ahead podcast for oil and gas. We will see you guys this afternoon for the digital ticker.